Welcome back. We are here with Betsy Mayotte, the president of the Institute of Student Loan Advisors, and she's discussing all things student loans. So let's talk about borrowing don'ts. Experts say parents should only help children with loans if it doesn't jeopardize their finances. Can you explain why?
Because parents should be focusing on retirement. I actually work with a lot of parent borrowers or older borrowers that are really struggling with paying off the student debt they took on, either by co-signing on a loan for their child or taking on what we call Parent Plus loans and having these what sometimes are huge payments for those loans. Meanwhile, they're trying to save for retirement or actually retire. So, any financial expert will tell you that at that point you should be focusing on your retirement savings.
Got it. Okay, let's get to some of the questions we've been getting here. Someone says, my son works part-time and will have to pay his loans back soon. He doesn't make much money. What should he do?
He's absolutely someone who should look into those income-driven repayment plans. If he's only working part-time, chances are really good that his payment would actually be zero, and he would have some, if not all, of the interest forgiven along the way by being on one of those income-driven repayment plans. So that's absolutely the first direction he should head.
Someone's wondering, they say my student loan went into default and my balance doubled. This seems excessive. Do I have any course of action?
So along with some of the other many waivers and temporary programs that the Biden administration has put into place during the COVID pause, one of the really exciting ones is a temporary program called Fresh Start. It's only available until around August of 2024. But essentially, it's a way for borrowers who are in default to get out of default really quickly and painlessly. They just need to call whoever is collecting on the loan and tell them that they want to opt in to the Fresh Start program, and they will be taken out of default within 30 days. Even better, the default line will be removed from their credit report like it was never there. And then at that point, they'll be eligible to pursue these forgiveness programs, these income-driven repayment plans, and they won't have to worry about any type of wage garnishment or so on in the future.
Okay, we have just about a minute left. I'm going to get through a couple of these quickly. If I'm still in school, when do I start paying back my student loan?
In general, you start repayment 6 months after the first time you become less than half time in school or when you graduate, whichever comes first.
My loan was forgiven under the Teacher Loan Forgiveness Program. Does this stand?
It absolutely stands. You never have to worry about that loan again.
Why do I have to pay interest on student loans? I prefer to pay what was borrowed.
Ask Congress. Congress is the one who sets the interest rates for federal student loans, and a lot of that money is used for other things like Pell Grants or even just paying to administer the student loan program.
This person's wondering, how long will it take if loan payments are not paid by October to start affecting my credit score?
Usually it would be 90 days. However, the department recognizes the issues that are coming with Repayment Restart, and they're giving people a little bit of a runway. So it shouldn't affect their credit for about a year.
Okay, Betsy, thank you so much for your help today. We do really appreciate it. I know a lot of people appreciate it as well. If you missed any of this, you can go on the News 2 YouTube page to watch these segments in their entirety.